Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullah. Now let's move into another topic, that is chapter 7 of your textbook on incremental analysis. So at the end of this chapter, you should be able to describe management's decision-making process and incremental analysis. That means you need to know what are the decision-making that the short-term decision-making that will be made by the management. And when we want to make that decision, then we will look into the incremental analysis. Next is about you need to be able to analyze the relevant cost in accepting an order at a special price. So we look into the relevant cost. And then next, analyze the relevant cost in a make or buy decision. So this one is one of the decision that you need to make, that is a special order. The next one is that we look into the decision making, whether we want to make or buy a certain component or a certain product. The fourth one is that we will analyze the relevant cost in determining whether to sell or process materials further. So the decision that you want to make is whether you want to sell now at the current state or you want to further process that material. So you have to make a decision whether you want to decide A, you want to go for alternative A or for alternative B. So this is another decision that we will look into. And then we will consider another decision in repairing, retaining, or you want to replace that equipment. So you look into the relevant cost. Next, you analyze the relevant cost, whether when you want to make a decision whether to eliminate an unprofitable segment or product, or you want to retain that particular segment or product. So this is basically the thing that you need to know. Okay, with regard to the incremental analysis, is basically you are making decision, the short-term decision making. So when you want to make a decision, you need to look into relevant costs. So that's why you have here the relevant costs. So the types of decision that you're going to make, so includes all these decisions. Okay, so at the end of the chapter, you should be able to calculate, or you should be able to make that particular decision by looking at the relevant cost. All right. So describe management's decision-making process and incremental analysis. So making decision is an important management function, as we have seen in chapter 1 or the managerial accounting basics previously, that one of the management's function is to make that decision. Okay, but in making the decision, it does not always follow a set of pattern. So decisions vary in scope, in terms of its urgency, in terms of its importance. So from it will be case by case basis. And then steps usually involved in process include, so the first one, you identify the problem and assign the responsibility. Next, determine and evaluate the possible causes of action. So you have choice A, choice B, and choice C, for example. So you need to determine and evaluate what are the alternatives that are available. And then when you want to make a decision, you have to review. So you have to consider, if you are talking about the cost, then we are looking at the relevant cost. So that is, you make that decision. After that, you review the results of the decision. This one is where the corrective action will take place, and then you want to evaluate whether the one that you plan is the actual results that you got is the same as the one that you have planned, or that the choice that you have made. Okay, this is basically the flow of the management's decision making process. Okay. In making these business decisions, we not only need to consider the financial, but we also need to consider the non-financial information. So in making a business decision, we need to look into both, that is the financial as well as the non-financial information. So what includes in the financial information? As you know, things that relates to ringgit and cent, that will be your revenue and your cost. That is basically when you want to calculate the profit. Profit is the difference between your revenue and your cost. So of course, when you want to look into the financial effect of the decision that you want to make, you will look into the first one is the revenue, the second one is the cost, and the third one is the overall profit. So that is basically when we talk about the financial information. But besides that, when you want to make a decision, if let's say you want to decide whether you want to close a certain segment that is not profitable, or you want to retain that segment and continue with your business for that particular segment. So you see that particular segment, for example, is making a loss. But what about the non-financial information? What about the employees? If they are being unemployed, what happens to them? What about the effect on the environment? What about the effect on the overall company's image? And so many other non-financial information, or not what we call as qualitative factors, or the non-financial information factors that can affect your decision. So all these things you need to take into consideration when you want to make decision, right? So decisions involve a choice among alternative actions. So you want to, it will involve choices. So process used to identify the financial data that change under alternative courses of action. So both cost and revenue may vary. Only revenues may vary, only costs may vary. That means when you want to make that decision, you look at the items that, this one, what are the things that may change, or they may remains the same. So alternative terminology, incremental analysis is also called differential analysis, because the analysis focuses on the differences. So you look at the difference between alternative A and alternative B. What are the differences? So you focus on that. So sometimes it is called as the differential analysis. Okay. So for example, so this one is a basic approach in incremental analysis. So let's say it's actually very simple. Okay, you look at alternative A, and then you look at alternative B, and then you look at the difference. So for example, for alternative A, you will have a revenue of 125,000. What if you go for alternative B? So that will generate a revenue of 110,000. So you see, if you are talking about the revenue, of course, you want it to be the higher the better. So you compare 125 and 110. So you will see, if you go for alternative B, there will be a net decrease in your revenue. So your revenue will decrease by 15,000. What about the cost? So the cost, if you go for alternative B, then for alternative A, the cost is 100,000. For alternative B, the cost is 80,000. So there will be a difference of 20,000 in terms of the cost if you go for, you compare alternative A and alternative B. So what about the net income? So the net income will be a difference of 5,000. So then the difference in your cost is 20 and the revenue is 15. Here you have a net income difference of 5,000. So incremental revenue is 15,000 less under alternative B. Okay, this one under alternative B, it is less by 15,000. Incremental cost savings of 20,000 is realized. So that means if you go for alternative B, of course, you want to have a lower cost compared to a higher one. So you will have a cost savings of 20,000 because alternative B gives you a lower cost. Okay, and then alternative B will produce 5,000 more net income compared to alternative A. Right, so this is an example of how you do the incremental analysis. You look at the increment, you look at the difference between the two alternatives that you have. So important concepts used in incremental analysis. So you need to know what is relevant cost, what is opportunity cost, what is sunk cost. So we will look into all these important terms before we move on into making that decision. Sometimes it involves changes that seem contrary to intuition. So variable costs sometimes do not change under alternative because based on what we have known, that variable cost means they change. But there could be a scenario whereby your variable costs do not change under that alternatives. And sometimes your fixed costs will change between that alternatives. So common types of decisions in your incremental analysis. This one we have looked into. We will look into one by one later on in terms of the calculation. For example, what are the decisions that you need to make? So you may decide whether you want to accept an order at a special price. You want to decide whether you want to make or you want to buy a particular component or a certain finished product. You may decide whether you want to sell at the current state or you want to further process that item. You may decide whether you want to repair and then retain that item or you want to just replace that equipment. Or maybe you want to decide if you have an unprofitable business segment, you want to eliminate that unprofitable business segment or that unprofitable product, or you want to retain that. So these are some of the examples of the decision that you want to make, and we will look into in more detail in terms of the calculation one by one. So incremental analysis is the process of identifying the So what is incremental analysis? So it is basically the process of identifying the financial data that change under alternative courses of action. You are looking at what are the changes between your alternatives, right? So with that, I thank you.